Hello everyone, this is Poonam Harjani, leader of Taxman's Advisory and Research Support Services. On 3rd of August 2022, the CBIC has come up with an important circular which clarifies the scope and taxability of passive actions under the GST law. In this video, we are decoding what the circular clarifies and the taxman's take on it. Paragraph 5E of Schedule 2 of the Central GST Act covers the following as a service. There are three limbs to this entry. The first one reads as agreeing to the obligation to refrain from an act. The circular dated 3rd of August gives an example of such an arrangement. Amongst other things, the circular talks about a non-compete agreement. The non-compete agreement is an arrangement whereby one party agrees to not compete with the product or services or in the geography of another party for a consideration. The circular clarifies that such an arrangement is clearly an obligation, agreeing to an obligation to refrain from an act, and hence is taxable. The second limb of this entry is with respect to agreeing to the obligation to tolerate an act or a situation. The circular again gives an example of an RWA permitting use of loudspeakers by a nearby school in the early morning hours. The third limb of this entry reads as agreeing to obligation to do an act. The circular again gives an example of an industrial unit to install a pollution control equipment at the behest of an RWA when such industrial unit is not statutorily required to do so. So these are some of the examples which have been clarified to be clearly covered under the scope of entry under paragraph 5E of Schedule 2 and hence, if undertaken for a consideration, are liable to be taxed. The circular elaborately talks about the determining factors to decode the scope of entry 5E that we just saw. To begin with, the circular talks about various aspects of the contractual relationship between the parties which are relevant to determine the scope of passive actions. The circular clearly says that there must exist a contractual relationship. That is, the person doing an activity must do so at the desire of the person for whom the activity is done in exchange for a consideration. And the activity, friends, here includes abstaining from an act as well. The second aspect highlighted in the circular is that the contractual relationship could be express or implied, it could be oral or written, but it cannot be presumed. The circular also highlights that there must be a necessary and sufficient nexus between the supply, that is, the agreement to do or abstain from doing something, and the consideration for it. Another aspect mentioned in the circular is that such contractual arrangement must be an independent arrangement in its own right. It should not be a mere event of the contract. And lastly, with respect to contractual relationship, the circular says that such agreement or arrangement can be in the form of an independent standalone contract or maybe a part of another contract. So friends, there are 5 important tests that have been applied for various categories of payouts to come to a conclusion whether such payouts would fall in the category of passive actions by the CBIC. The first test relates to whether the amount paid is to deter an act or to tolerate an act. So circular says that the following are clearly not passive actions because the payout is to deter an act and not to tolerate an act. The examples given in the circular are liquidated damages for breach of a contract, penalties under the Mining Act for excess stock found with the mining company, forfeiture of salary or payout as amount as per the employment bond for leaving the employment before the minimum agreed period. And lastly, penalty for check disorder. So in all these cases, the CBIC has clarified that since the action is not to tolerate, but to deter the toleration of a violation, such activities, such arrangements are not to be considered as passive actions. Friends, the second test relied upon by the CBIC is whether a contract to the contrary is possible. In the examples that we discussed in the previous slide, for each of those, the CBIC has taken a view that there cannot be a contract to the contrary. For example, there can't be a contract for breach of a contract. There can't be a contract for holding stock more than the permitted limit under the mining contract. Again, there cannot be contract for leaving employment before the minimum agreed period. And there cannot be contract for doing something leading to dishonor of a check. Now, relying on this aspect that there cannot be a contract to the contrary, the CBIC has concluded that each of these examples relate to the arrangements or payouts which do not relate to passive actions. The third test that is covered under the circular is whether the payer is getting anything in return. The circular clarifies that the forfeiture of earnest money in an agreement to sell is not a passive action, given that the payer does not get anything in return. The relevant paragraph of the circular reads as, the forfeiture of earnest money by a seller in case of breach of an agreement to sell an immovable property by a buyer or government or local authority in the event of a successful bidder failing to act after winning the bid for allotment of natural resources is merely a flow of money, as a buyer or the successful bidder does not get anything in return for such forfeiture of earnest money. The fourth test applied in the circular is whether the party making payout had an option not to agree. And the example taken to this effect in the circular is with respect to cancellation of coal blocks by the government for a compensation. The circular says that there was no agreement between the prior allottees of the coal blocks and the government that the previous allottees shall agree to tolerate or cancellation of the coal blocks allocated to them if the government pays compensation to them. No such promise or offer was made by the prior allottees to the government. The allottees had no option but to accept cancellation. So friends, another test applied in the circular is whether the person making payment had an option not to enter into the arrangement or not to opt for what is being provided by the other party. The final test outlined in the circular is whether the payout is for a facility offered in common business practices. And the circular clarifies that the cancellation charges are consideration for offering a facility of cancellation. And this clarification has been issued with respect to several charges where the cancellation fee is being charged by various businesses. The circular reads as it is a common business practice for suppliers of services such as hotel accommodation, tour and travel, transportation, etc., to provide the facility of cancellation of intended supplies within a certain period of time on payment of cancellation fee. Cancellation fee can be considered as charges for the costs involved in making arrangements for the intended supply and the costs involved in cancellation of the supply, such as in cancellation of reserved tickets by Indian Railways. And hence, an important aspect of the circular is that the cancellation charges and forfeiture fees has been clarified to be taxable for GST purposes. Friends, there are a couple of factors that have been explicitly mentioned as not relevant to determine the scope of passive actions. Firstly, the circular says that a mere flow of money from one party to another does not lead to presumption of existence of a contract for agreeing to tolerate or act or any other limbs for passive actions. Also, what is the nomenclature used for the payout is an irrelevant criteria. Friends, now let's look at some of the specific payouts with respect to which the CBIC has clarified its stand. So let's first look at what does the circular talk about with respect to liquidated damages. The circular says that liquidated damages are in the nature of a compensation. They're not by way of a consideration for any other independent activity. And they are just an event in the course of performance of an underlying contract. And in fact, they are payment for not tolerating the breach of a contract. And the circular also says that there is no agreement expressed or implied by the aggrieved party to refrain from or tolerate an act or to do or anything for party paying the liquidated damages. Friends, the analogy applied by the CBIC with respect to liquidated damages is at a level of concept is absolutely correct. And the circular thankfully talks about non-taxability of all kinds of liquidated damages, whether it is with respect to non-performance or unsatisfactory performance or delayed performance. However, the taxability of a damage or compensation paid, which is otherwise by way of the specific terms of a contract, that is not specifically addressed in the circular. On the other side, the same section of the circular talks about several payouts which as per the CBIC are payments as per commercial terms and hence have to be considered as consideration for passive actions. And these include late payment charges, cancellation charges, early termination charges, forfeiture charges, foreclosure charges. The circular says that all these are to be taxed as per the underlying principal supply. Here, friends, we do not find any intelligible differential between the forfeiture of earnest money, example given in the circular earlier part, where the circular clearly says that in such cases, the bidder whose earnest money is being forfeited is not getting anything in return. So likewise, in our view, even with respect to cancellation charges and other charges mentioned herein, what is being paid in return, what is the payer getting in return is not clear, and that point has not been addressed. So if the test of payer not getting anything in return is applicable for earnest money, why is it not applicable in case of cancellation charges is not clarified in the circular. Moving on to the clarification issued with respect to cancellation of coal blocks, like we have discussed in the earlier part of today's video. The circular says the payment is in the nature of a compensation. There is no prior agreement that existed between for the event of cancellation, and the allotee had no option to accept not to accept the cancellation. And based on that, the circular clarifies that such charge outs are not paid taxable. And in our view, this analogy by the CBIC is absolutely accurate. With respect to fine or penalty for check dishonor, the circular says that there is an absence of intention of the outcome of the check dishonor itself. The amount levied is not to tolerate, but to deter the act of or situation of dishonor. Friends, this analogy in our view also stands a good footing and hence is totally acceptable. Moving on to the penalty for violation of law. The circular says that there is an absence of intention of the outcome, namely the violation of law. The laws are not framed for tolerating their violation, and hence the amount levied is not to tolerate but to deter the act or situation and not a passive action. Again, this analogy stands the correct footing of law and hence is totally acceptable. However, one of the aspects that's missing to be clarified in the circular is what happens to taxation of compounding fee. Friends, at times the government itself, the laws itself provide for the condoning of certain offenses, certain violations on payment of a compounding fee. Whether those would qualify as passive actions is a point that has not been addressed in the circular. A very good news for businesses which were struggling to decode the taxability of early payouts for recoveries for early termination of employment. The circular says that there is an absence of intention of the outcome of early termination. Hence, the amount levied is not to tolerate but to deter such act or situation. And the circular also observes that the employee does not get anything in return. So friends, while we totally agree with the analogy that there is absence of intention, and that is correct, we have our doubts on the finding in the circular which says that the employee did not get anything in return. That is, in our view, prima facie incorrect. With respect to compensation for not collecting toll charges, there has been a debate where the project authority was paying tax, compensation to the developers for not collecting toll charges from the actual users. The debate that has been going on is whether such a payment by the project authority is liable to be taxed. The circular says that it's a mere case of diversion of consideration. Instead of the actual user, the consideration is being received from the project authority, and that does not change the nature of the consideration and the underlying supplier. And therefore, the service is classifiable as access of road. Friends, we agree with the analogy of the CBIC on this point. With respect to late fee, the circular clarifies that these are the charges for tolerating delay and therefore taxable and the taxability needs to be determined as per the nature of the principal supply. Friends, we do agree that by tolerating delay, there is a quid pro quo and the other tests are being satisfied in this case, and hence the CBIC's observation that such late payment fees ought to be taxable as per the principal supply in our view is correct. The important part to be noted is that unlike our previous examples that we saw, here the CBIC has relied on the charge of late fee being a common business practice. And that's a new test that has been applied by the CBIC this point forward in the circular. With respect to fixed capacity charges charged by the DISCOMs and the state electricity boards for supply of power, the CBIC circular says that the charges are in the nature of consideration for supply of power and hence are to be considered as the consideration for electricity itself. Since electricity is in itself not taxable, accordingly, the fixed capacity charges will also not attract any GST. In our view, the analogy drawn in the circular is absolutely accurate. And while the circular does not specifically talk about other contractual stipulations where there is minimum business commitment, the same analogy in our view can be applied to such kind of scenarios as well. The most controversial part with respect to the circular in our view is the clarification issued vis-a-vis the cancellation charges. The circular says that the charges are in the nature of a facility to cancel the intended underlying supply. The cancellation can be considered as charges for costs involved in making the arrangements for the intended supply and the cost involved in cancellation of such supply. And hence, the facility is and the circular also relies on the fact that the facility is invariably provided by all suppliers and is naturally bundled and hence has to be taxable, taxed as per the underlying principal supply. Friends, like we said that this is the most controversial part of the circular. The circular relies on only one test here, which is the common business practice. And there is no intelligible differentia created between the example of the forfeiture of earnest money taken in the circular and the cancellation charges. In both cases, in our view, the payer does not get anything in return. And the circular itself recognizes that as a relevant test to determine the scope of passive actions. And hence, in our view, the debate, the argument should equally apply here. And the common business practice test, if at all, needs to be applied, it needs to be applied with respect to all charges and not just with respect to cancellation charges. So in substance, friends, the circular is definitely a huge step taken by this government to settle a plethora of litigation with respect to, specifically with respect to liquidated damages. The suppliers who have paid service tax or GST may explore the possibility of refund for the past period, of course, subject to satisfying the condition of no unjust enrichment. And likewise, the recipients who have borne the tax, whether it's service tax or GST, may explore the possibility of refund for the past period. The clarifications in the circular are mostly well-reasoned and aligned with the Indian and international jurisprudence. However, only with respect to the clarifications issued with respect to cancellation and forfeiture charges, application of only one test, namely the common business practice test, is in our view not a sufficient test applied and is likely to continue to be a bone of contention between the taxpayers and the revenue. And hence, the litigation with respect to cancellation and forfeiture charges are likely to continue in future too. Thank you so much for being with me on this video, friends. I appreciate your time and your listening. And I thank my team for being my partner in delivering this video. I once again thank you for being here, and I would encourage you to check out our website www.taxmann.com/advisory to know more about our advisory services. Thank you and have a good day.